Good afternoon, everyone. Hope you are enjoying the trading day off. So this is like 3:45 p.m. right now. I'm trying to do a Q&A blog post in a video audio combo. Let's see how it goes. So basically, I put a tweet out on April 26th asking people to come up with questions on trading, anything related to trading, except methodologies, idea, and indicators, because that's not the scope of this tweet. So I'm gonna see whether I can answer everything. This is live. Actually, I'm not editing anything. Whatever I think about, as soon as I see the question, I'm gonna say that. So it's basically my thought process that's gonna come out. So let's hope the video and the audio quality is good, and let's hope it's viewable, listenable, at the same time enjoyable. Alright, so let's get into the questions. First question, Kumaran and P. I'm going to keep it short and sweet, right? So it's going to be a little bit faster. It's going to be a little bit crisper. And let's see. As an intra trader, how do you decide on position sizing for a particular day? Position sizing basically depends on the stop loss, Kumar. If the stop loss is more, I would reduce the position size to keep my risk constant. Let's say I'm risking 2%. I want to keep the risk 2% on every single trade. So if one of the stop losses is larger than the usual, usually what I do is I reduce the position size. So that's what I've been doing in the intraday activity for the past couple of days. I always do that, but for simplicity purpose, I wanted to keep the position size as constant, but of course market gave bigger stop losses and I had to avoid a lot of trades. So that's past. But anyways, to answer your question, it depends on the stop loss. I'm sorry. Second question, Umesh. Hi Madan, my question is, market is so volatile and dynamic, how to possibly to make fixed rule in intraday trading? Umesh, whether it's intraday or positional or swing or even for investment purpose, we always have some kind of framework, rule in mind, right? When I say rule, it doesn't have to be like, really stringent rule, some kind of framework. So I know a lot of discretionary traders here, in Twitter, outside Twitter, I know a couple of people who also trade reasonably well in a discretionary way, but I have felt that the mechanical way of trading suits most of the people, because there is some kind of feedback mechanism where people can go back and see what kind of mistakes they have made, whether they have jumped the system, whether they have jumped the rules, and probably fix it based on that, right? But in discretionary, there is no way one can do that, because your mood determines your quality of the discretionary decisions. Let's say I have a fight with my wife today morning, I'm going to come to the market and I'm going to have a bad day because my decisions are going to be bad. But if you have a mechanical way of trading, whether I have a bad day with my wife, in my office, whether somebody cut me off in the traffic, doesn't matter, because I'm just going to follow a mechanical way of trading. So nothing right or wrong here, but I feel comfortable in the mechanical way of trading, so I follow it and I am reasonably okay with that. Next question, Shashi. Dear, if system gives buy signal, if you buy Nifty, we have to pay 196 rupees per lot brokerage and other charged. Oh yeah, I read this question before. So he asked this question in DM too, by the way, so I know this question. See, Shashi, the thing is, it does not matter after we move up in size. Let's say somebody is trading 2 lots, 3 lots, or 4 lots, or 10 lots. It might look like a big deal, but once we move up the size, it's just part of the cost. Rather than paying 1.5 or 2 rupees per trade in Nifty, somebody would be paying like 0.6 or 0.7. That's like 1.3 points difference. But options does have some kind of eroding capital, right? So basically, I just don't want to get into options thing. I just want to keep things simple, so I am trading futures. I'm not a big options guy. There are a lot of option experts here, so they can probably answer your question better, but I'm not a big options guy. Next, how do you not get, this is from PA Trading, okay, no name. How do you not get disturbed by trolling in Twitter? Okay, trolling in Twitter, honestly, I have not been trolled that much in public, but a lot of trolls come in private. I don't know the specific reason for that. but that's all right. I know what I'm doing, and I'm pretty thick-skinned, I believe. So let's see how thick my skin is. All right. So how to move from losing to consistently profitable in trading? It's a very good question, and it actually requires a big answer. Let me keep it short and simple. Of course, people should have a trading plan. I'm not saying losing trader has all these qualities, or winning trader does not have all these qualities, but all I'm saying is who you are. So just pick up whatever you want from this answer. So one should have a trading plan, trading journal. You need to have a lot of patience with respect to winning trades, and you have to be impatient with losing trades, basically cutting the loser short. Making money is more important than being right. A lot of people are stuck in the need to be right bias. So making money is more important. That's why we are doing trading. One should have a trading edge, and that trading edge should be easily explainable to a 5-year-old. If a 5-year-old cannot understand your trading idea, probably it's too complex. Then understanding that the previous trade result has no bearing on the current trade's result. So basically, people carry their previous trade result, whether it's a win or lose, whether it's a win or loss. People basically carry that forward to the current trade and probably mess it up. So we should not do that. A lot of people think markets are too cheap. So I don't want to probably sell here, or market is too expensive, I don't want to buy here, right? So that kind of thinking has to stop, and I might be a little bit biased here. I actually recommend rule-based trading, mechanical way of trading, for various reasons, plethora of reasons, but that's beyond the scope of this question. Basically, another thing, the person has to be like a chameleon. What is a chameleon? Chameleon is the one which changes color based on the background, right? So the chameleon way of trading has to be there. Basically, he has to be willing to change sides if the market tells them to. You should not have doctrinated views for long or short. And the most important one, never add to a losing trade. So these are some of the things people do, and I hope that you are not doing majority of them, and if you're doing only some of them, it's good. You can always change that and probably move into consistent profitability in trading, right? Why you're not charging money for your calls? Why free? Even losing traders who give calls charge 5,000 and 10,000 per month. I am not sure. I don't know why I'm not charging. Basically, this came up as an activity where I want to show people that a small account can be taken into a decent size account. Of course, we got stuck in the Murphy's law, and I also made some mistake of not reducing the position size, so we are in a drawdown. But of course, plan is on. I might go for paid subscription. Basically, the trolls are getting bad nowadays in DMs, so it's just probably not worth the time, I guess. Anyways, it's all business, right? So trading is also a business, so nothing wrong in extra income. Let's see where it goes. Do you conduct classes? No. Kanna, one more question. Is there any specific reason that you don't book profits? I mean partial profits. I used to see you trade with 4 lots, but I haven't seen you book partially. Okay, this is again a big question. Basically, Kanna wants to know why I don't scale out of my position. See, Kanna, I have done a lot of extensive testing and research on all in, all out, all in, scale out, scale in, all out, right? 3 types. But what I feel is, I think all in, all out by far will give the best return with respect to risk. Scale out is basically for mental comfort, to ease out to smoothen out the equity curve, and probably want to have a good comfort mentally, because you seem to have more winners with scaling out. So if somebody is psychologically a little bit shaky, or they don't want to see a lot of losses in their trading journal, then scaling out is probably a best thing to do. Nothing right or wrong again. Again, a lot of people scale in, they don't get into a full position, they actually enter into a position partially, so they do that too. But in my experience and a lot of extensive research what I have done, all in, all out is the best. So I don't partially book profits. Okay, my question is on trade management. This is from Chips Trader. Do you have experience with scale in, scale out? I just talked about that. So basically, again, as I said, scaling out just smoothens out the equity curve. It does not necessarily make more net profit. Holding a full position for a winner and keeping the initial stop large can actually produce large net profits for us, but of course it requires a very strong psychological constitution. So that's what it is. Next question. Okay, there you go. Man, no, don't do that. Let's go back. Okay. Okay. Next question. We answered the scaling in, scaling out. Let's move on to, oh wow, a lot of questions actually. Okay. We talked about Chips Trader question. Let's get to Mr. Bitu. How do we choose stocks for intraday and long-term picks? Bitu, I don't know. I don't have a filter to get into basket of stocks, so I'm not really sure. Long-term picks, I actually give it to experts. I don't do it myself. Hey Madan, what conditions you look at for not taking a trade on a particular day, like even day, low range day, or any others? By AKS. Your name says Sharma Amit. Hey Amit, the thing is, when I backtest, I really don't care about Brexit day or Donald Trump's day, Fed day, or RBI day, right? So in intraday trading, I really don't care about all these event day, low range days, or something like that, because I really don't know whether it will be a low range day or a high range day. But in my positional trading, if there is an event, I actually close with my positions. So I don't carry the positions to the event day. Basically, that's all I do. What if my strategy stops working? By Shreyas. Does this question bother you? Yeah, it used to bother me, but I've been using the same strategy in position for the last 9 years, and I'm doing pretty okay. Not bad, not good. Decent average, I would say. So this question does not bother me, because I know a person from Oklahoma City, Oklahoma. She's a trader there. She's 64 years old lady. Trading in Oklahoma, and I know that she has been using the same system for the past 32 years. When I say 32 years, it's like more than 3 decades, right? So she used the same thing, and she still trades. That's what John told me a couple of years ago. She still trades, and she's still sticking with the system. And I know a lot of hedge funds do that too. So they have a system, they run the system, they go through drawdowns for a couple of years, they come back to break even, they hit equity curve high, and then they again go back to drawdown. So they do the same system. So that doesn't bother me anymore. Sashi again, intraday trading, 90% people lose money, then why it is so popular all over the world? I think it's leverage. Intraday trading always have more leverage. So people get spoiled by the leverage. It's a double-edged sword, right? Actually, the sword which cuts you, the end which cuts you, is more sharper. So we get cut. What is losing percentage in positional trading? I would say the same, 90-95%. But intraday seems to be more, because a lot of people come up with very small amount of money, use a lot of leverage, and they lose money. Okay, Sam, what is the implication to retail traders with reference to the option compulsory delivery scheme being implemented by SEBI? I'm not sure, Sam. I don't think that has been implemented yet. It's probably on the line, on the pipeline. So let's cross the bridge when it comes. Cam, what strategy do you use to reduce risk, specifically risk of a big loss or risk of rain? I don't risk much in any of the trades I do. And overnight risk, I really don't have any control. So in my positional system, I risk like 0.75% per trade, sometimes 1%, depending on how far the event day or something like that, right? So usually 0.75%, most of the time, 99% of the time. So even if there is a big circuit limit against me in Nifty, let's say, I would lose like 15%, something like that. I don't know, maybe 9%, 10%, 12%, something like that. So that's probably a dent, but not a big psychological dent, I would say. So that's how I do it. I just reduce the risk. I don't know what kind of strategies to use for that. Which is the best time frame to trade swing trading? Anything that suits you, Shashi. 15 minutes, 30 minutes. I know people using hourly chart. some people use even daily chart. So it's a very subjective word, right? Swing trading. Sundar, how to control emotions and let the winners run even when you know it is on the run. Okay, how many years on average to become full-time trader? Okay, what's the next question? I haven't traded the bear market said, do volumes of price action rise up with no follow through? Is it no different than bull market? Okay, how to control emotions and let the winners run? It takes time. See, especially, it's a good question. Actually, your question number 1 and question number 3 are pretty interrelated. Bear market moves in an elevator, like the elevator goes down, and the bull market moves up, like as if you climb up the stairs, right? So when bear market comes in and then we get a big negative day, it's not gonna stop at 30 points or 40 points in Nifty. It's gonna go all the way to 100 points, 150 points, 200 points sometimes. So if you keep having targets on those days, you're gonna sit idle for the rest of the day because market will not even give a pullback. So I see that you have not traded the bear market said, yeah, that's how bear markets people make money, and people also not make money because they cut the winner shot. So it takes time, I guess. It's a big question, Sundar, but thanks for the question. Probably I will talk about it in detail in another blog post, not in this. We're already into 16 minutes of the video. How many years on average to become full time? I would say 5 years if you're lucky. If you're unlucky, probably 7-8 years, I would say. I was a little bit lucky, 3-4 years for me. Anyways, what were the homeworks do you suggest? Okay, this question is from I can't see it again, Kanna. Okay, what are the homeworks do you suggest a novice trader to do before the market begins, during market hours and after the during market hours? Nothing, actually, because we should not use our brain before entry or during the trade or during the exit, because I'm a mechanical trader, so I don't use that, right? After the UOD, of course, we have to journal it. Every week we have to go back to the journal and see what has happened, what we have done wrong, whether we have followed the rules. If you have followed the rules and made loss, that's an excellent trade. If you have followed the rules and made money, it's an excellent trade. If you have not followed the rules and made money, that's the worst trade possible for various reasons. So that kind of analysis can be done after the UOD. What were the homeworks do you suggest a novice trader to do before the market begins? Nothing much. Just eat well. An empty stomach can give bad decisions. Eat well, sleep well, exercise well, and if you have any kind of filter system wherein you filter stocks through some kind of indicators and then pick up 2 or 3 stocks for the day, you got to do that. In my case, I trade Nifty, so I don't have any plan. I just have exit plan, in case of any kind of adverse gaps against me. That's it. Is trading a means to an end or an end in itself? What? Okay, Edge Monk. Okay. Is trading a means to an end or an end in itself? It started as a means to an end for me. I don't think I'll be quitting. Oh, that's a question right there above Edge Monk. Prashant, do you see yourself trading for the rest of your life? Maybe, I'm not sure, Prashant. The thing is, one of my relative has been trading for 26 years now. He's above 60. He has not quit trading. He's doing fine, but he's still not quit trading because I think it invigorates his brain. So I think after some time, I don't think it's going to be the money. It's going to be the process of playing the game. So to answer the question, Edge Monk, I think it is probably the end to something. I don't know how to answer your question, actually. Okay. This seems to be replies to something. Okay, Karthik, Nixon. Okay, Karthik, if the R&R is very less, we win consistently and increase position size aggressively. Is it a good way to think? What are the caveats? If the R&R is very less, of course your winning rate should be high. That's what I'm assuming, because if the winning rate is high, your R&R will be less. If the winning rate is low, your R&R will be high. So if the R&R is less, we win consistently. Yes, that's true. But the problem is, I think Nixon has mentioned that somewhere. Yeah, the problem is when we hit a series of trades, the losing trades, it's going to be draining mentally, and most of the trend following systems, they have a big R&R with small win rate, lower win rate. So if you're asking this question, I'm thinking that you are trying to trade a mean reversion system. So nothing wrong in that. You just have to create a money management based on your R&R and winning rate and see where it goes. Okay, Sriram, why is it that intraday systems don't function that very well as a positional system? Is it purely technical reasons, or are there any fundamental reasons for the same? Sriram, I think any system profitability or the longevity of the system, the sustainability of the system, it all depends on the parameters of the system. So it doesn't matter whether it's intraday or positional. But I think people take more leverage intraday, and they probably blow up the accounts or have a bigger drawdown, make mistakes, because intraday market moves fast. So because of the mistakes and the leverage, it seems that intraday system doesn't function well. But I think whether it's intraday or positional, it does not matter. So that's my opinion. Okay, next question. Okay, Rajesh, I face a critical problem many times. I'm a positional trader with win ratio around 40-50%. When my 2/3 of the continuous trades performs well, should I avoid reduce size on next few trades? Law of average catch up? Should I? Okay, breaks discipline, or just go with the full position? Okay. Rajesh, you are asking a question about predicting the sequence. This is one of the biggest mistakes a lot of traders do. Many traders I have seen, they try to predict the trade sequence. For example, if 5 trades are winners in a row, then they expect the 6th trade to be a loser, and they will not pull the trigger or reduce the size drastically, expecting a losing trade. But that's how market plays, right? If the 6th trade can also be a big winner, and once you miss out on a big winner, your psychological implication starts kicking in. You'll feel like kicking yourself out. Then you will start making trading mistakes. Then you will probably have a series of mistakes wherein it will create a vicious cycle. So I would say predicting a sequence is really fatal in trading. Most of us don't talk about that, but this kind of bias is actually very real. So it's actually a very good question you asked. So do not predict the sequence. Just go with the flow. You just have the risk in control, and believe in the law of averages, and I think you should be fine. Okay, I think there are some more questions here. Which one? Okay, Sriram, which one item in your trading system will you give the topmost priority? Profit per trade, risk to reward ratio, number of trades generated, max drawdown on capital, number of profit trade versus lost trades. Sriram, it's like asking a question, which component is really important in a car, whether it's a steering wheel or engine or tires or the suspension or the or the brake system, right? So everything is important. Everything has a role. The car can run only when everything comes in equal play. So that's how I see this question. But there are certain things which are not like really important here compared to others, like number of profit trades versus lost trades. For that's like winning ratio, it's not really important. Profit per trade, okay. Risk to reward ratio, very important. Number of trades generated, it's very important for a person who does not want to have a lot of trades, or who trades in a big size, because the impact cost will be more if you have more number of trades, because once you go big size, your impact cost would increase, and the number of trades you have will have a greater impact on your cost. Max drawdown on capital is absolutely important. So yes, the profit, risk to reward ratio, number of trades generated, max drawdown on capital are three more important things, most important things, and profit per trade and number of profits trade was last trade is not that important. Okay, next question. Ravi, do you manage shorts and longs differently? No, Ravi. Everything is same for me. Your thumb rule for number of trades in a month based on trading time frame for 30 minutes. I get like 6 to 7 trades on a 30 minutes chart, so there is no thumb rule. Whatever the system gives in. Actually, there is no thumb rule here. Okay, next question. Once a trading system is developed, how do you go about refining it? I don't refine it once it is developed. The refining thought comes in once we get into losses, once we get into drawdown. A lot of people I know, they go all gung-ho about rule-based trading, mechanical trading. They started, they have a great money management plan, but once the drawdown hits, they will try to see how they can remove the losing trades and probably keep the winning trades, but that doesn't work that way, right? So they keep on looking for reducing the losing trades. That will also tantamount to some kind of holy grail search, in my opinion. So I think we should not, once, because your question says once a trading system is developed, so once it is developed, right? Once you attain age 20, 21, you're not going to grow more. You're not going to grow taller. That's what I'm saying. So the same way, once we have our system developed, we just need to stick with it. We just need to be aware of when the system works, when it doesn't work. So when we enter into a period where the system doesn't work, we just know that system is not going to work in that period, but we can't predict that, right? A lot of people say I have two kinds of system, one system for trend following, one system for range bound. But my question to them is, how do you know it's range bound at 9:15 a.m. in the morning? There is no way you're going to know that. There are some telltale signs, but nobody's going to know for sure. So that's that. Okay, one more question, I guess. Okay, AAA11. Okay, Madan, please guide how to find stock for 7 to 1 month. Oh no, I'm passing this question. So there were some questions on DM. I'm going to see that here. Okay, first question. I can't live without seeing charts every day. I see them even during weekends. My wife thinks I'm addicted. I even get withdrawal symptoms. Wow. If I don't look at price chart for 24 hours, what should I do? I'm addicted to charts. Okay. Actually, there are a lot of people stuck in this routine of looking at the charts every single day. They go to vacation, they open their tabs, they open their iPads, laptops, mobiles, and keep looking at the chart. So I just don't understand why people have to do that. What is the point of going on to vacation, right? But anyways, to answer your question, yes, it seems like an addiction. I think your wife is right. It's better to listen to the wife always. That's a general advice, by the way. So yeah, I think you're addicted. What should I do? You just need to get out of charts, remove all the gadgets which has the charts, give it to your wife, ask her to keep it in a locker, ask her to keep the key, and you just go out with the wife and the kids, if you have kids. So that's all you can do. But this is not good, seeing charts every day, every single hour, every single weekend. What do you think about traders conducting training workshops, advisory services, managing money, and online webinars? If a trader makes serious money, what is the need to conduct this workshop service? This is a very good question. See, trading is a business, right? So if somebody is making extra income based on their trading knowledge or based on their trading expertise, I don't think anything wrong with it. I know a lot of people do training workshops, online webinars. I know some people do manage money. Some people employ traders to manage money because they have more money to manage. So nothing wrong in any of these things. I don't think anything wrong with this. Even the advisory services, nothing is wrong with that. It's just a way of making extra money. But there is an element of fact here, wherein a lot of losing traders, people who cannot really trade for themselves, they actually get into training workshops, the advisory services and online webinars. There is a element of fact there, but I personally believe there is nothing wrong in making more money legally and honestly. So that's all I think about this. What is the need to conduct these workshop services? More money, nothing else. They have the knowledge, they have people looking for their knowledge, they have people looking for their advices, they have people looking for managing their money. Nothing wrong. They just extra money for them. Can trading markets be an alternative for a newbie as a part-time income? Okay, this is a very good question. Yeah, absolutely not. I don't think so. Trading takes time to learn, brother. So there are few trading workshops, educators, very few actually, not much, very few. They try to make you believe it's easy money, but actually it's not. Trading is very lucrative once you get it down and get things right, but it won't happen overnight. So if you are new and you want to make part-time income from trading, I would say big no. So, but you might ask, why it has to take a lot of time. Then I will ask you a question: does playing for the Indian cricket team takes time? Yes. If the answer is yes to that question, yes, answer is yes to this question too. So it will take time to make money in trading. What was the real turning point for your trading? If you could start over, what would you do different? Okay. Well, I don't believe there is one aha moment in my trading. I think it takes time. Everything good takes time, right? Everything good takes patience. So understanding the markets over time means you constantly paint a picture of the market environment. You learn from each environment. So bull, bear and choppy. So once somebody has gone through a couple of bull cycles, couple of bear cycles and couple of choppy periods, then they would understand what trading is. They would understand exactly what law of averages mean. So if I could start over, what I would do different? I would not do anything different, because all my mistakes, they are part of my winning armor. Without those mistakes, I don't think I would be winning this consistently. What separates the professional traders from the rest? A real professional trader, I think you would realize that the market does not give linear returns. So basically there are now returns every month. If somebody is expecting consistent money every month, then trading is not for them. I think the professional traders are very well aware of that. And second thing, I think the professional traders have no bias in terms of long or short. They just move in and out of the trades with no emotions. Whatever market tells them, they do that. I think that's what separates professional traders from the rest. So yeah, with this I think this experimental video Q&A blog post is done, I guess. So I will try to upload this. Right now the time is 4:16. We are done with this, and hope you guys enjoyed it. We will catch up with one another video some other time. I'm planning to do this every month, once in a month. So let's catch up one more time sometime else. Alright then, take care, bye bye.